Hey everybody, good morning. It's about 8:16 in the morning. It is September 16th, 2022. It's Friday. You know what that means. The end of the week. We're getting ready to go into low liquidity for crypto over the weekend as institutions are taking the weekend off. And the markets are also going to be closed. So here's also Quad Witch. It is the Quad Witch options expiration. Lots of really fun stuff is going to happen today, and so what I'd like to do is get in front of it. Before I get my morning notes out to everybody on the Discord, I'd like to just do a real quick update on where the market's going to go today, or at least where I believe the market's going to go today. And of course, before I get into any of this, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. So that is my 56 seconds of disclaimer and introduction. So let's go ahead and move on into the chart. All right, so I'm going to start with the S&P 500. And just for the record, for those of you that are watching, I am going to have a little bit of a Bitcoin surprise at the end of the video today, assuming that my health and my cough manages to keep up. I've been under the weather for about 2.5 weeks now. I'm still kind of on the fritz, but the cough is getting a little bit better, so I figured that this was a good day to get something out to you guys. All right, so we'd been talking for a while that, we've been in this bear market and we're going to see a continuation downward. For the longest time, we had been talking about this broadening, expanding wedge. We had been talking about this for weeks, probably the better part of, 2-3 months. We've been talking about a broadening, expanding wedge as a leading broadening, expanding wedge, which is extremely bearish. So I just kind of want to talk about how this has evolved over time, and kind of taken into relation where we're at right now. So let's take a look at the higher time frame first. So I'm going to zoom out here, take a look at this all the way from back to the very beginning, and let's go ahead and get rid of any indicator that we have on the chart. So looking from this, we look at these going in waves of 3 when you're talking about like diagonals. So from here, have a little ABC here, and then ABC here, ABC here. And of course, this is wave 3. This was pretty deep. Then we have a little ABC here. And we're looking to potentially complete this in 5 waves at the very end. But it could be that it just does complete in 3 waves. So if this does complete in 3 waves, well, we've got, our 1, 2, 3, 4, 5, and then ABC 5, 3, and then working on that last 5-wave move down. So this would finish this move. I'm not going to talk about where I think it's going to go. You can get some ideas based off of this trend line here. I don't think it's going to get quite that far down. I think the trend line is going to get truncated. So in other words, I don't think it's going to go quite as far down as what the trend line would suggest. But so far, that upper trend line has proven to be pretty strong resistance throughout the entire year, all the way back from the very, very, very beginning of January. January 4th is where we created the top. And then over here on March 29th, we created another top. And then we just recently here in August created another top. And of course, we have seen, generally speaking, a downtrend since then. Just kind of going back to July, I said for the longest time, and it was all the way back here, the mid to the end of June, I said, July is going to be bullish, and July was very bullish. Basically, here is the very beginning of July here at 37.46, and then it ended up here at 41.28. So, we're talking about, 350, 400 points to the upside for the month of July. That was really good. And it actually did continue through the first couple weeks of August until we hit our top. All right, so we hit the top, and now we're starting to move down. So let's talk about where we are today. I'm going to go down to let's go down to a 5-minute time frame. And just to talk about this, we had this, the CPI print, and obviously the market reacted very unfavorably towards that. We had talked about, getting short here. We had another gap up day. That's what these purple boxes are. These are the actual trading hours. So, between the hours of 9:30 a.m. and 4 p.m., we had a gap up day here. We had a gap up day here. I did get squeezed out of some of my short positions here, but I kept some of my longer term things and some of my futures I closed my small account, I kept my large account open, and we saw a very, very steep decline off of that. Our wave master indicator was also indicating, right around here, hey, we're getting close to a top. From there, the market did go up about 2%, but then even from this point right here, the market has gone down 5% since then. Not 5% from the top, but 5% where the indicator, our wave master indicator, said, hey, you should probably be looking to get short here. We were in a very strong uptrend. We had gap up after gap up after gap up, but then it just fell off. Fell off the rails here, and we saw a really steep move down. I sent out an update, and it was approximately, it was at where we were about 4,060. It was right here. I sent out an update to everybody on the Discord, and I said, hey guys, we are more than likely going to see prices go back down below 4,000, and we are more than likely going to see it continue down further than that. I'm not going to talk about where that target was, but now that we're here, right now we're all the way down at 38.80. Of course, hindsight's always 20/20, but this was all outlined to everybody on the Discord. This is all outlined to the Discord for quite some time now. And from this, what we developed, we were talking about this being a wave one, and, I said we're probably not going to see a very strong move up to create, a short position, right? If you weren't short, what you always look for is a retrace to get short again. And we didn't get that. What we had was, going all the way back over here, we saw we had a little bit of support back here. And then what we ended up doing is that exact same level, which was about 39.76, 39.77. We created resistance at that same level. We never got through it. I was ready to add to my shorts when we saw a retrace up here to 4,000 to 4,030. That would be basically looking at this cluster right here, seeing a move from here up to that before we saw this move down. That didn't happen, so I was not able to add to my short positions yesterday as I had hoped. Of course, there's been lots of opportunity for swing plays, day trades, really great opportunities there. But at the end of the day, I think that what we're in the middle of right now is a wave three, and there's a lot of people on Twitter, on online and other various social media platforms. They're always talking about the same thing, that we're in a wave three right now, and that we're going to continue moving down. With today being OPEX, I think we're going to have some fireworks at the end of the day. Something that some members on the Discord and I have been talking a lot about is max pain. Max pain for the S&P 500 for today, which is what actually expires here in about 1 hour and 6 minutes. That's the AM expiration, is at 4,000. The highest amount of open interest is at 4,000 in both the calls and the put sides, over 100,000 on the actual index. We're not talking about SPY, we're talking about the index, and 100,000 is a lot. So we're nowhere near that, and we are not going to get there in the next hour. So somebody's going to end up paying out quite a bit on that. But that just kind of goes to highlight that open interest and max pain can only be taken so far. I think there's other variables that you have to take a look at there. I'm not going to get into those now. And that could be going into to gamma and other Greeks that are underlying in the options, and what institutions have to do in order to hedge their positions as the price goes unfavorably against them. Keeping in mind, the options market is designed to profit options sellers. So there are ways that institutions can, work their way around things like this. And when the market is moving to the downside, selling puts isn't always a bad thing if you're short stock. But anyway, that's really enough on that. This 39.76.75, that is going to be an important level to get back up above in order to see continued upside. Right now, my best guess, because these are all hypothesis, my best guess is we're not going to get above that anytime soon. And we're probably, since we are below the low here of September 6th, we're not having a really good reaction off of this. Let's just go ahead and kind of zoom in here. What happened the last time we were at this level? How long were we down here? We had a big move down. We had a strong recovery off of that. So right here we had, we're having to move down. We had a little bit of a bump, but we're all the way back down again. It's more signs of weakness. So I would be very cautious opening any kind of long position here, unless it's a scalp or a day trade, or maybe it's something where we actually are starting to turn prior support levels, getting those out of resistance. So if we have a support level like we had at 39.76.75, then it became resistance. I wouldn't be looking to go long until we got up above that. And we really need to hold up above that for me to think about taking any long positions. But we also have to look like we are completing the structure that we're currently in, and it does not look like this structure is complete. Okay? Let's just talk really quickly about how Fibonacci will play into all of this. All right, so obviously you can see here I've got a wave 1 and then an expanded flat into wave 2. So wave 2 is up here. So how important was this level? Well, let's just go ahead and take a look at this. We're going to take a fib retrace, dominant pivot high, dominant pivot low. And what happened? We went to the golden zone. We rejected strongly off of that. The first target to the downside is at 38.10. We're on our way there right now. Is that going to be the bottom? Probably not. So let's talk about where that bottom might be. We're going to talk about a couple different levels. So dominant pivot high, bottom for the wave 1, not the expanded flat, bottom for the wave 1. We go back up here for the retrace. So we've got a couple different areas that we need to watch for there to be support. So we should have seen support here at the 618, and we did. Let me just zoom in on this really quick here. We did see a little bit of support right here. We bounced off of that, but then it failed. So the next level is 37.66. All right, the level below that is going to be 36.75. Now, if this is a wave 3 that we're in, we've got all the way down here at 35.33. These are all levels that we need to pay attention to. And if this is a wave 3, we've got a pretty steep move down before we see any kind of significant recovery. Now, I say significant recovery because we're going to see bounces, right? We are absolutely going to see bounces, and what that is going to do is that is going to rip the faces off of late bears, okay? Can you short here? Sure, go for it. Would I long here? No. Would I short here? I would short here with caution and with a plan to get out, just in case the market does take a turn and rips your face off. You have to be very careful for that. Because again, we saw a really strong move down here, all the way up here. August 16th, we saw this move all the way down here. That's a 9.8% down move. But then, what we ended up seeing here was a nice 7.48% move to the upside. All right, so do I think we're going to see any significant bounce anytime soon? No. Do I think we're going to see a significant bounce in the coming 2-3 weeks? I think it's very possible that we do. Very possible that we do. We're starting to create some resistance, or at least we should have some resistance somewhere in this area right here. So watch out for a move above 3,900 short term, right? So this level is sort of a new level in the short term. So within the last 3 weeks, this is a level that has been supportive, and it should be resistance now that we're starting to move lower than the prior pivot point. So right up here, a move above 3,900 would open up the door to go back up to 39.76. That doesn't mean that it has to happen. It opens the door so you can take some educated long positions for a short-term period of time to try and capture that move, but I would still be very cautious. I would be more inclined to short than to long. That's what I've got on the S&P 500. So that's your 10 minutes on the S&P 500. Let me spend about 5 minutes on Bitcoin, because Bitcoin looks a lot different than the S&P. So I'm going to go to a daily here, and I want to talk about where I think things are currently heading on Bitcoin. All right, so obviously we have a top here, right? So what we've got, at least what I believe we've got, 1, 2, 3, 4, 5, ABC. And then 1, 2, 3, 4 going down for this expanded flat. So again, this is something that we are seeing more and more in the markets. We're starting to see expanded flats because what those do is they tend to trick you, right? We have been seeing expanded flats to the downside on the S&P, but in this case, this was an expanded flat to the upside. Again, it's designed to trap you because you've got this level right here. You've got this pivot point right here. And then what the expanded flat does is it breaks that pivot, and that'll trap breakout traders every day of the week. And if you don't have a plan to get out, then what you end up finding yourself in is holding bags, and now we're all the way down here. You know, we're down like, gosh, what is it, like 60% from the top? 71% from the top. So, again, you have to have a plan to get out, especially if you're a breakout trader. Or if you are a breakout trader and you're not planning to get out, make sure you risk an amount that you're willing to lose, because that, you know, especially if you're using leverage, you know, the chances of that getting liquidated are pretty high. If you're not planning on getting out and you're planning on holding, whatever that mentality may be. But again, very easy to see. 1, 2, 3, 4, 5 into the A, A, B, C, A, B, C, A, B, C up here into the B. And then, of course, 1, 2, 3, 4, 5 into the 1. We can see these A, B, C's all over the place right here. A, B, C. Let me put this on a lesser degree. All right, so we've got a little A, B, C there. 1, 2, 3, 4, 5, A, B, C. We've got it right there. Let me go ahead and match that. So we've got the A, B, C there. I'm going to try and get these all in the same degree so that they look the same, right? And so now we've got, drilling down just a little bit here, let's talk about where we're at right now. We've got from the top here 1, 2, 3, and then the 3, 1, 2, 3, 4, 5, A, B, C into the 4, 5, A, B, C into the A, B, C into the B, and then 1, 2, 3, 4, 5 into the C. And very similar to what we just looked at on the S&P 500, this is that same fib pull, right? Right here, top, dominant pivot high, low of the 5. Let's pull it out. What do we have? A front run of the 618. The target here is going to be 18,379. Are we going to get to 18,379? Chances are pretty good, yes. Are we going to get lower than 18,379? Chances are good, yes. Down here, if we measure this, 5, A, B, C, 3. All right, we're seeing that support at the 618. Target right now is going to be at about 17,660. If that breaks, we're going to look at 16,617. And if that breaks, we're in a wave 3. We're looking at a move down here to about 15,000, maybe 15,100. So that is my short and sweet update on Bitcoin. I'm not super bullish on Bitcoin. However, it is possible that we do see a move up here before we see a move further down. So that would be a move back up above 20,000, almost to 20,500 before we see a move down. Am I going to long here? No. Am I going to short a rip? Yes. And that is my current hypothesis on Bitcoin. It would not surprise me to see a little bit of a pump over the weekend while the markets are closed before we see another continuation move to the downside. And I do think we're going to get it. And I think that there is high potential that we're going to see a significant move to the downside. So that is my thoughts on the S&P 500. That and my thoughts on Bitcoin. If this video did help you in any way, shape, or form, you know the deal. Like, subscribe, share, all the good stuff. If you want access to our Discord, if you want access to our trades, if you want access to all of our information, our education, you know, just visit BitDoctor.org. You can email me. You can DM me on Twitter. You know, we do post a lot of stuff on our Wavemaster Twitter. We do post a lot of different indicators on there. There's, you know, kind of a funny little interaction with a user on Twitter that said, hey, trend is up, so everybody thinks we're going to go down, so we're just going to keep on going up. And that was one day before the big drop that we had earlier this week. So if you need access to our indicator, BitDoctor.org. And make sure you like, subscribe, share, all that good stuff. And of course, wherever you are in the world, I hope you're having a good day, a good night, and a good evening. Take care, everyone.